Hello everyone, thank you and welcome to the channel. Today I'm going to talk about the purchase items and the basic steps for the purchase items, and we'll go through the process, and then I will explain the consequences of each process step on the inventory and accounting, how those affect. So as we already saw, uh, the purchase are basically four steps: purchase order, good receipt PO, AP invoice, and outgoing payment. Generally, the outgoing payment is the part of banking, but when you purchase something from the vendor, you have to pay. So that's where the outgoing is also the part of it. And then let's assume in a scenario that you have an item, let's call it printer, and you already have the printer with the 10 quantity, right? And your current quantity of the printer in your default location is 10, and a minimum inventory of the printer is 15 that you need to fulfill to your regular customer orders. But when the stock dips too low, purchase orders are used to begin the purchasing process. And when the vendors deliver the printer, a good receipt PO is created. After the items are inspected, a AP invoice can be created, and then the payment can goes out. Then let's see for the purchase order. The purchase order represents a commercial document between a buyer like us and the seller as compared to the vendor, right? So let's go to the purchase order, and the vendor is the person from where we're gonna buy our printers, right? And it's contain the agree on quantity and the price, like how much price and how much quantity we're gonna get, uh, and for that particular printer, right? And PO data is copied automatically to the next documents using this copy to methods. I will show you later. And also we can check about the inventory, like how much stocks we have right now into the item. For example, if we go into the item master data and right click and check the inventory status, you will see that for this item we have 10 in stock quantity and 10 is also available. The same for available to promise report, we see in stock we have 10. And the second way to check the quantity available in the stock is 10 from here in the inventory data tab as well of the item master data. Okay, so now when we already saw that the item have the 10 printers, so what happened when we make another purchase order for this from this vendor for this particular item, right? Let's say I want 5 printer, right, in this price, and after the taxes it's gonna be this price, and I'm gonna add this purchase order. So now if you look into the document, right, if you look into the document, we have ordered the 5 printer, but it's not in the stock because, as I told in the previous video, that the purchase order does not affect on the inventory, right? So right now the order quantity would be 5 and the total available quantity is 15. When you check the available to promise report, it's gonna show you the 15 of that particular item, and in the inventory report it's gonna show 10 in the stock and 10 is order, and you can make your item available for 15 quantity, right, for this item. But physically we only have 10 items. So now the second thing you have to check is the logistic and ship to and pay to address. These address is basically copied from the addresses if you have address in here, or if it's gonna take like the default address of the customer, or if there is no address, then if you go to the item, for example, if you go to this item and check the warehouse, we make the default warehouse is 01, and if you open this warehouse you will see the address here is the similar to your ship to address, right? It's going to be the same address as your warehouse. So that can handle differently. Now, the bill to address is also can be depend. The pay to address is simply same as the bill to address, right? And now, like the purchase order can be created two times, right? The first one is item and the second one is service. The item is basically the items we assume that they're gonna be need the physical location, and that's why we need to create the item type, and we need to have some warehouse where we can put the item in the physical location. But as compared to the service is basically you are giving some kind of service to the company, like consulting or something to the other company, and you are just billing as a service. So for the service you do not need a physical location, so in the service there would be no warehouse selected. Therefore the company ship to address will always by default into the service type purchasing documents. The other important address in the purchase order is pay to address, as I said, and the pay to address is displayed under the logistic tab here, right? And the default from the vendor business partner master data record. So for example, if you go here and if you define some address in the pay to, then that address will be get copied here. And of course, if needed, you can change the address in each marketing document as per you go. But for the bottom end, like there would be no inventory hit. As we can see, the available is 15, but in your stock we still have 10 after creating the purchase document. Now the creating a GRPO when you receive the goods. So let's say you create the purchase order and your vendor agreed to send that items into the warehouse. So now it's time to create the GRPO and create direct or building from an existing purchase order. So there's basically two ways to create one GRPO, right? Either you can open directly a GRPO and create the new one from here, or you can simply go here and click on the good receipt PO, copy to, and every information will be get copied from your purchase order into the GRPO. So you do not need to enter anything else if unless you need it. So for example, your purchase order is for the 5 quantity, but your vendor is only sending right now for 3 quantity. So then in that case, you can change the quantity here and your purchase order will be still open because that quantity would be 2 remaining quantity. So as long as that's called partial order, and I will discuss later in the depth about that. But once you create the GRPO, it matches the vendor shipping documents and GRPO to get the inventory and accounting transactions, right? So now, because the vendor documents are legally binding, if there are any discrepancy, any difference, let's say, between the base PO data and the vendor shipping documents, you should resolve them vendor before you post any good receipt PO, right? So in the purchase order, you should resolve everything, all the issues that you have with the vendor before creating the GRPO, because once you're creating the GRPO, it's gonna hit your inventory, it's gonna hit your journal, and so it's gonna be a long process to cancel them. And unlike the purchase order, a good receipt PO cannot be amended after it because it has been added to the SAP Business One and it triggered both inventory. And when using the perpetual inventory accounting transactions, so your only option for the fix the incorrect good receipt PO is to basically cancel it once you add one document. But if you cancel the purchase order from here, that's gonna be no effect into your inventory transaction or anything. So now if you make sure that you already have 10 printers in your inventory and you are ready to get the 5 printer more from the order, then you can just make the copy to GRPO and hit add. Once you add it, now you will see that if you go to the item master data, now you have in inventory available in your stock is 15 and available is 15. Now the available and promise report is 15 now. So you can promise your customers that you can deliver up to 15 printer again, right? But now, as you saw, the the ordered quantity become from 5 to 0 in here, right? So now, as I was talking about, now you can simply use the two functions, copy to and copy from. So for example, if you wanna open, you open one good receipt here, you select this vendor. Now you have one option. Either you can use the copy to the way we did, or you can just open the copy from and you can select the purchase order, open, and you can use that in for creating your good receipt, right? So now after the copying button, well, depend on like if you take in the full quantity of the purchase order and if you refresh it, you will see that the purchase order status is get closed and your GRPO is still open, right? Because the purchase order is done and based on the purchase order, we created a GRPO. So the status of purchase order is now closed. And another advantage of using the copy to or copy from is basically it reduces the human error to like entering the same information again and again, and it also reduces the time for creating the document, right? So now the another good example of checking the inventory is you can use the open item list. You can select the purchase order if you have some open, or you can check also the good receipt PO. As you can see, we just created one for this document on this date. So this open item list gonna show you almost all the marketing documents and some other documents into the list, and you will see all the details into one report. You can also use inventory report, inventory status report, or you can see directly the item master data to check the current inventory, right? Now, when you create the good receipt PO and when you copy that item, then as I said, like if you use all the items and all the quantity, then the purchase order get closed. And now in the GRPO, now if you see in here, we have to check if our company is the perpetual or not. So you can simply check it from here. In here, and it should be somewhere here, use the perpetual inventory. So when you use this option, then that means when you create a GRPO, it's going to hit a journal entry, but we are not using it, so there is no journal entry for this item right now, right? So, and also the stock quantity get updated as we already saw, and then basically once the GRPO is done, then you can simply copy this GRPO to make the payment to the vendor, and all the necessary detail is get copied from your good receipt PO to AP invoice. If everything looks good, then you can simply add it, and while adding this, you can see a remark, and on these remark it's basically giving you all the information which are related to your particular documents, right? So when you hit that, right, you will add one AP invoice into the record, and in this invoice, as you can see, if you now right click and open the journal entry, then it created one journal entry against to pay this this vendor for this much money from your company account, and then including this much taxes. So now it's time when everything is good. Now you already created the AP invoice. Now it's time to pay your vendor. So you can simply go to your banking, open the outgoing payment, because you create the outgoing payment when you are giving someone some money, right? So when you select this vendor, you will see the document number and the amount that you have to pay. The amount is already here. You just do here the control B. The amount will copy directly. You can select the transfer date let's say today. You select the amount from where you're gonna pay, right? And you just hit add. It's gonna tell you that once you add it, you cannot change. So once you add it, there's gonna be another journal entry booking based on this document. And if you open that journal entry, it's gonna create a reverse journal entry of the previous one, which is showing that our account get credited and we paid this much amount to this vendor on this date, right? And it's gonna make all the journal entry balanced in your accounting. As you can see, the purchase order never hit the inventory, and the good receipt PO gonna hit your inventory. Also, if you're using the perpetual inventory system, then it's gonna hit your general ledger, and at the end you have to make the invoice and the payment. That was all for the purchase items. That was the basic introduction, and stay tuned, and I'm gonna upload the next videos regarding the purchase module as soon as possible. Thank you.